Welcome back to Beyond Four Walls, Conversations on Affordable Housing. I'm David Dworkin, President and CEO of the National Housing Conference, the nation's oldest and broadest affordable housing coalition. I'm joined today by Wendy Penn, Vice President of Affordable Housing Initiatives at the Mortgage Bankers Association, and Anna Teye-Kasongo, Assistant Executive Director at the Affordable Housing Alliance of Central Ohio. Wendy leads CONVERGENCE, MBA's flagship initiative focused on expanding access to homeownership through cross-sector community partnerships. In this role, Wendy oversees local market programs and directs the CONVERGENCE Collaborative, a nonprofit coalition of industry leaders working to bridge the information, trust, market, and resource gaps that create barriers to homeownership. She also serves on NHC's National Advisory Council. In her role at the Affordable Housing Alliance of Central Ohio, Anna leads priorities around affordable and sustainable homeownership, community engagement, leadership and advocacy training, and faith and mission-driven development resources. With a background rooted in empowerment initiatives and international research, Anna brings both global perspective and local impact to her work. Welcome. I'm so excited to talk with you both today.
Thank you, David. I'm pleased to be here.
Thank you for having us.
Tell me a little bit about CONVERGENCE, Wendy, and then I want to learn more about what's happening in Columbus. We've worked together on CONVERGENCE for many years, active in the Black Homeownership Collaborative and mortgage bankers work, and it's just so exciting. I had the benefit of seeing the work you're doing firsthand in Memphis, but for everybody listening, what is CONVERGENCE? Why does it matter?
Yeah, thanks, David. And it's amazing to think that it has been around since 2019. It predates me a little bit. I joined MEA in 2021, but there's been a significant amount of growth. But CONVERGENCE is an initiative to expand access to homeownership by leveraging innovative community partnerships. And it is really rooted in the idea that we can do more when we work together. And so when MBA sought to create this program, there were two primary challenges that we wanted to address. The first is bridging the gaps that create barriers to homeownership, specifically in underserved communities. One of those gaps is information. So the myths and misperceptions out there about homeownership that keep people from even trying. The trust gap. People will opt out because they're afraid they're going to be mistreated in the process in some way and will decide that homeownership isn't for them. We look at market gaps. And so that really relates to housing supply and figuring out ways to help smaller nonprofit developers do infill development and rehab and bring maybe vacant homes back into productive use, and the resource gap. So thinking about the financial piece of it, making sure there's a good mix of financial programs and products, and ensuring that housing practitioners are aware of them and can serve their customers. And then the second challenge we really wanted to address is breaking down the silos among homeownership stakeholders and practitioners that often reinforce those barriers. So CONVERGENCE brings together lenders and real estate professionals, nonprofits, counselors, all the people in the housing ecosystem at both the local and national level to come together to creatively think of ways to get people into homeownership. And CONVERGENCE is a framework. It's not a specific prescribed set of programs. It's really about aligning all of those stakeholders to think creatively to develop new solutions. And those solution areas are around education and outreach, lending programs and products, housing supply, preservation and sustainability, and then the research and evaluation piece to support that. We have several place-based initiatives in place. Memphis, as you mentioned, that was the first to launch in 2020, and then Columbus, Ohio in 2021, and then Philadelphia in 2023. And Baltimore, Maryland is launching now and will be fully active later this year. And in each of those cities, CONVERGENCE is led by a mission-aligned nonprofit organization that is the lead, or the host, as we call them. And they are really the local face and voice of the initiative. They play a critical role in gathering the stakeholders, developing the strategy, and implementing the solutions. As I said, this has been around since 2019, and along the way, we've realized we also can do more if we work together. And so that's where the CONVERGENCE Collaborative comes into play. And as you mentioned at the top, it is a nonprofit organization of MBA and several other industry partners who have pooled resources, financial resources, strategic resources, subject matter expertise to really support the expansion of CONVERGENCE. And so the collaborative includes MBA and other trades like the National Association of Realtors, the American Land Title Association, as well as lenders and builders and data providers. And so that group together works to develop the strategy and guidance and funding support to expand convergence and replicate programs and launch new initiatives.
That is amazing. And you identified, I think, the four major gaps that I've always seen in the years I've been preaching the gospel of homeownership, as I like to say. And then this concept of stakeholder silos, which I want to come back to, because I think most people who watch what we do don't understand just how siloed we are. It's not something we brag about, but if you want to get stuff done, you have to tackle it. I want to cover each of these four areas. I want to do it in the context of these localities. And so let me go to Anna and say, tell me about Columbus. How does this apply to Columbus? Why Columbus, do you think, is such an important city to be involved in this initiative? What are you experiencing in Columbus, both in terms of barriers, but also opportunities?
So what's interesting is just earlier this year, Columbus was listed as part of the top 10 home buying markets in the nation. And this is according to the National Association of Realtors.
Mm-hmm.
And when we saw the data, we said, you know what? That makes a lot of sense because our home prices are clearly outpacing median incomes. We're seeing a lot of business interest in Columbus, which we welcome. But at the same time, we're not building enough housing to accommodate for not only, long-term residents, people who have been here for decades, but also the transplants that these businesses are attracting into the marketplace. So back in 2021, when Convergence Columbus came into existence, the home ownership gap was about 32%. And that was listed as, I think, the second largest gap in any metropolitan city in the nation. And this gap is wider than it was back in 1968, prior to the passage of the Fair Housing Act. So the conversation on the ground was, how do we ensure that this gap does not continue to widen? We also see the business interest in Columbus, and how can we ensure, as we continue to boom, that we are not making homeownership and housing out of reach for Columbus residents? So the Affordable Housing Alliance of Central Ohio, of which I am the assistant executive director, has had a longstanding history of really looking at the data, the trends in the market, what is happening in housing land. And equitable housing was very much a key priority, one of our pillars. So when the MBA started talking about convergence and the framework of partnership, of getting people outside of their silos and kind of having an all-hands-on-deck approach to tackling our homeownership gaps, the Affordable Housing Alliance raised our hands because we see where the gap is heading. We see how much it is widening, and we know that there are partners on the ground, whether that's housing counselors, the Columbus Realtors, or the Columbus Realtors Association, lending agents who have affordable mortgages and are looking into down payment assistance. We knew we had basically the sauce, for lack of better words, to ensure that, especially when it comes to our minority communities, that homeownership was more accessible, more equitable, and that we had resources available to them so that that gap does not continue to widen.
So one of the things that we've heard more of recently is this question that, frankly, a lot of people used to think and not say, which is why all this focus on Black homeownership, on minority homeownership? Isn't there equal opportunity for everyone? And, one of the things that I try to explain is, even if you take away any discrimination, you still have this incredible running start, and how important that is. If I just look at my own experience, number one, I was raised in a family where everybody assumed I was going to be a homeowner. So there was no kind of leap of faith involved. It was an expectation. And that's a big deal. And there was also the fact that I got really amazing advice from my parents who had already been through it. I wasn't on my own. And to be honest, I got the daddy down payment loan. You can only get that if you have family wealth. And all of those things were the result of my father, who was the first person in his family to become a homeowner ever. And he did that because he had access to the GI Bill and the VA home loan after he served in World War II. That began a process of building multi-generational wealth in my family. people who, say, the black corporal who served in the Pacific, not with him because they weren't actually allowed to serve together, that person never got those benefits. I remind people, we're not talking about giving people something new and different. We're talking about giving them something that we got a long time ago. That's not a handout. That's simply doing what we should have done in the beginning and doing it now. So I always, am frustrated when people talk about, well, why this and why that? And I'm like, well, these negative impacts from before have an impact today. How do you see that in the families that you work with to help become homeowners? Let's talk about those three areas. And Wendy touched on them in terms of information and trust. But what is it like for potential home buyers who know nobody in their family who's ever been a home or a true first-generation home buyer? What are they coming to the table with, and how do you address that?
So I could start just here in Columbus. The great thing that Convergence Columbus built was Bloom 614, which really is a one-stop shop homeownership resource. It really tackles that trust gap, that information gap, that market and resource gap that Wendy just shared. And we do a lot of community outreach as part of that, really homebuyer education curated to the needs of the specific communities that we so happen to get involved with. One thing that I commonly see is, first off, how can I buy a home when the median sales price is about $320,000? I don't earn a salary of $110,000 to make that possible for myself. And, my mother and my grandparents, we've all been renters. We've rented for decades. So there really is no framework to make homeownership possible because A, people are being outpriced, and B, there is that generational knowledge of how to get it done is also missing. So the great thing is we have conversations about down payment assistance. We have conversations about housing counseling. Many people don't know that there are HUD certified counselors who, for free, will look into your budget, your savings, your credit profile, and get you home ready, not just credit literate, but home ready. People don't realize that a lot of lenders, especially those who are in the Convergence partnership, recognize that there is a gap between the assets of buyers and the prices of homes. And there are many affordable first mortgages paired with down payment assistance to make it possible for them to get the keys into their first home. So just a lot of conversation that, yes, your reality is true. You may not have this information, but here's a resource for you. And it's a resource that's really focused on trust and making sure you understand that you are being served by a group of people who really want to make sure that you make it to the finish line, but also that we understand the history that got us here in the first place for why there are such large gaps within our city.
So, Wendy, you work with lenders all over the country, not just in the targeted cities, but what's your experience working with lenders on the special needs of first-generation home buyers and how lenders can address that?
Yes, we certainly want to make sure that our lenders are thinking about how they can serve a range of buyers. And those gaps that we've talked about, we talk about them as being opportunities. There is certainly a business case for this work. It's not just about it's a nice thing to do, but there's opportunity in that gap. And so one of the things that we really stress about Convergence that we think is different is really the role that lenders play. There's nothing new really about collaboration or working together, but often we see collaboration as hyper-local or narrowly focused. And often we see lenders as partners maybe for sponsorships and not really at the table thinking through some of these solutions. And the thing that makes Convergence different is all those stakeholders that I mentioned, including lenders, are thinking about all of the solutions. So we don't just have the lenders thinking about programs and products in a silo. They're hearing the voice of the counselor. They're hearing the voice of the real estate professional that's working with the first-time home buyer. And that really helps inform the way they approach how they work with that first-generation buyer or the buyer who's coming in without information or the benefit of having family down payment assistance, if you will, to purchase their home. And so all of those local practitioners are able to learn from each other. And that's another benefit of the local and national piece of Convergence. You have local practitioners being informed by not only a local loan officer is hearing, but executives at our member organizations. They have a voice at the table through the collaborative, and that passes through to what's happening at the local level. And then vice versa, those executives around the table are hearing the on-the-ground experience from the loan officers on their teams that are part of the work streams that are in Convergence. So it's a nice way to get feedback going both ways that can inform decisions about how programs are structured, how they're implemented, and really better able to understand the needs of that first-time buyer, that first-generation buyer who was really impacted by those information and trust gaps that we talked about.
So let's explore the information and trust gap a little more. It's a pretty scary process. I mean, it is judgmental by design. It is intended to be judgmental. Nobody likes being judged, but the entire process of qualifying a loan is about being judged. And if it wasn't, we would have a big problem on the lender side and the investor side because we're extending this huge amount of credit for a very long time. So how do I talk to people about this and get them ready for this process? Because as I said, one of the things I learned from my parents was, yeah, this is the way it is. Don't worry about it. It's a process. We've all been through it. Pretty much everything they told me to reassure me, a first-generation homebuyer is not hearing.
I was actually having a conversation with a member organization today. They reached out about Convergence and they were saying exactly what you are. They're developing an initiative to help talk to buyers who don't have the information. And just the idea of, we're going to see if you qualify. Let's see if you're mortgage ready. There's already intimidation there. There's already a feeling, like you said, of being judged. And that is where the community partners, like the host organizations like AHACO, like the counselors, like the other groups, really help bridge the gap to help the lenders and others understand the fear that comes into it. When you work in, the mortgage industry, that's your day-to-day. You're always talking about qualifying or the jargon that we have in our industry. And that doesn't make a buyer feel more reassured, or that doesn't comfort them in any way. But in some ways, that nonprofit organization works as a translator, if you will. They can take the information that they're hearing from a lender and maybe put it in terms that is less intimidating, that can explain some of the terms. And I will say Bloom does a wonderful job of explaining some of the terminology that a person's going to experience when they're going through that process to qualify for.
Because we love our acronyms.
We love
DTIAPR, PITIFICO,
exactly. And one of the things
XYZ.
in Convergence is, even though we all have our acronyms, they don't translate across industry. I was in a training session in Columbus. There were real estate professionals in the room. There were loan officers in the room. A loan officer was saying something, talking this jargon. And one of the real estate professionals basically said, I need you to explain that to me the way you'd explain it to a customer, because I don't understand any of those initials you just said. And so that's one of the things we see in Convergence. And that's sometimes the silos is there's an assumption, because you're all working on affordability, you're all working in housing, that the practitioners are speaking the same language. If they don't even understand each other, how can you expect a buyer to? And so those types of candid conversations happen in these work streams in Convergence. You have all of these practitioners at the table really talking about the experience that they've had with consumers. And it really just helps them better understand, helps them better relate, and really changes the message to a way that resonates more. Because for some people, the idea of generational wealth isn't the selling point for them. They want to know now, how long is it going to take for me to have equity? And then what can I do? Well, can I use it to start a business? I'm not that interested. Maybe I don't have children. I'm not worried about sending someone to college. So really explaining benefits of home ownership in a way that resonates with the individual borrower, the individual aspiring homeowner, is really important. And it takes a village to break that down and put it in ways that's going to resonate with a wide variety of people.
Especially with the relationship between lenders and housing counselors. That's one thing that I've had the privilege to have a front row seat, just to see how important that relationship is. So last year, Convergence Columbus, in addition to the Mortgage Bankers Association and Credivolve, we had a pilot called the Home Buyer Readiness Program. And the idea was, for those who have credit challenges, their DTI is too high, and have been told no, what does it look like to actually get them into hands-on housing counseling, teach those counselors a fintech software that would look into their credit profiles, that would give them the same lens as an underwriter would, really looking into that, what are the hiccups in that client's profile, give them that hands-on intervention, and then send them back to the lender. What would happen? And it was a whole year. We had about 200 people enroll in this pilot through Bloom 614 and other avenues. And we had 3 housing counseling agencies who worked with these clients. And what we saw was that just having that hands-on approach, these clients had more confidence when talking to a lender. They had more literacy about, okay, what really are the barriers that have prevented me from qualifying for a mortgage? And by the time they graduated from the process, 4 people were able to purchase homes. And that is because the lender saw that they went through this process and there was more confidence in going through the mortgage qualification process because he had gone through this extensive pilot. So that's just a snapshot of what it looks like to get out of those silos, for lack of better words, reach across the aisle to the housing counselor or a lender or a real estate agent. That end user, that client is more empowered, is more informed, and is better poised to successfully complete the process as a result of that partnership.
Well, and Wendy, it's really important for the loan officer as well. That relationship with the counselor saves a lot of time and money. And I think most folks don't understand that we compensate most of our loan officers based on their risk-weighted return that they're bringing in. That's how they get bonused. And so from their perspective, the easy loan is the easier money. And one of the things, back when I was at Fannie Mae in Detroit, I did not understand until I really understood how the marketing managers were compensated, was that the customer account managers who were really helping me the most were basically subsidizing my success with their own personal bonuses. And that does not make a lot of sense. At the same time, we don't want financial institutions ignoring risk-weighted return. Otherwise, we end up back in the second S&L crisis with folks making loans, or the most recent financial crisis. So the relationship with counselors is so valuable and important. Tell me, Wendy and Anna, what are they facing? And what are the resources that we either have or don't have to help them make it easier for our loan officers to make these loans?
One of the things that I often see with housing counseling is what we've just talked about. People are not aware of it. Unfortunately, it's still one of the best kept secrets. People don't fully understand it. And there's this misperception that you go to a housing counselor or any type of counseling is because you're in distress. That's a problem. It's the last place you go, more about foreclosure prevention than pre-purchase and sustainability. And part of that challenge, I think, is rooted in the reality that counseling agencies have money to deliver their services, but they don't have money for marketing campaigns. They don't have money for outreach campaigns. And that is one of the ways that I believe convergence can be helpful, because there is more of an opportunity perhaps for a lender partner or a real estate partner to help tell the story of housing counseling. So first, we have to address those challenges, the barriers, the trust issues among those professionals, so that the lender, the housing counselor, and the real estate professional can realize that they're all working toward the same goal, and then help better tell the story of counseling. And I think in general, storytelling is something that is going to be beneficial to all of those players. So if the real estate agent had a successful situation with a counselor, there's sometimes this fear that they're going to get stolen or directed to another agent who is more familiar with the programs. I've heard that for a long time. But if we can tell a better story of the successful outcomes, then more people, if you hear a peer have a good experience with a counselor, then you're more likely to refer someone. And the same thing with loan officers. If there's an understanding that, to your point, David, the housing counselor is going to do the work for you. They're going to help get that person to a point where you can approve that loan. The more loans you approve, that's going to benefit you. So really educating those other practitioners on the benefits of counseling so that they can be part of telling the story that unfortunately the counselors just don't have the capacity to do for themselves, because their industry is not really set up that way to promote themselves.
Well, and realtors and realtists play a big role in this as well as counselors. Anna, tell me a little bit about your work with the counselors, but also how you integrate the convergence work with the frontline guys who are taking them around in their car every day to look at properties.
So one thing that's interesting is our housing counselors really are the ones who built Bloom 614. It was a collaborative effort, but they wanted that story of the home ownership journey to be front and center. And part of that journey is the home inspection process. So here in Columbus, I don't know if it's across the nation, but our housing counselors jumped on one of our calls and said, we keep hearing clients are waiving the home inspection because they want to outbid corporate investors. They are being advised to waive the inspection so that they can rush the closing process, they can get ahead of these investors. And we want our agents and our lenders to understand why that's a bad idea. So they decided, let's build a whole series called Inspect the Unexpected. Use Bloom as the platform and a local inspection hero and basically talk about the home inspection process. What can you expect from it? What kind of questions you should ask the inspector, but also why it is a preservation tool later down the line. And through that series, we have been doing 2 trainings, one focused on home buyers and making sure that they have that resource in their hand, but another to real estate agents, because we don't know the ones who are making this advice, but we want them to also have the understanding as to why it would be in their best interest to advise their clients on the importance of a home inspection, and in order to see it as a way to increase the trust that client has in them.
Yeah.
So that's just one opportunity that we have really listened to the counselors and the things that they are seeing on the ground and brought it up to the coalition and did something about it, built a whole campaign surrounding this one issue and this one part of the homeownership journey. Now, when it comes to the real estate agents, you're absolutely right. They are on the front line. They are the ones who are navigating our crazy market. They are the ones who see clients who cannot afford what the going rate is right now for homes. And they come to the table and talk to the lenders and say, is there nothing you can do? Are there no opportunities to find more flexible financing tools? Is a 580 credit score really the lowest you can go? And then the lenders come and explain why a 580 is a risk mitigator for them. And that kind of conversation is what has helped us build a lot of our programs that have been trailblazers in our region. We've had over $6 million of down payment assistance out of those conversations with lenders, counselors, and real estate agents, really targeting those down payment barriers of first-generation, first-time home buyers. And it would not have happened if the real estate agents didn't say, people cannot afford what's out there. We need to do something about it.
Yeah. And I'm personally very hesitant to say, yeah, you should definitely be a homeowner if you have a 580 credit score, because I want you to succeed in your home ownership. And there are extenuating circumstances that can drive a credit score down while you're still an excellent risk. But you're a risk to yourself and your future if you're not ready. And I want to see that 580 become a 640, because that shift really shows somebody's very serious about being successful. It's worth the time and the effort. We know what it looks like when we set people up for failure. And for God's sakes, we don't want to do that again. I know in Columbus, you saw plenty of that during the Great Recession, the run up there. And when we talk about the gap in home ownership, that's where it is. The market blew up. And people who suffered the most, I think, were often people of color and people who had already been homeowners. They didn't get irresponsible loans to become a homeowner. They had good loans. They ended up being singled out for equity stripping and refinanced out of a good loan into a bad one. And that damage to the communities is just profound. So we're digging ourselves out of that hole even today.
And I would say that is one of the reasons that preservation and sustainability is a focus. It's one of the things when I mentioned the types of solutions that come out of these initiatives. To your point, we want to make sure people stay in their home. We want to make sure they understand when and why is it a good time to refinance, why maybe you shouldn't. And to Anna's point, that those conversations back and forth, like you said, this credit score, this is as low as we can go for XYZ, that educates the real estate agent. They can share that with the consumer and help avoid some of those situations that we saw where people did lose their homes, lost equity, all of those negative things.
So I'm glad you brought that conversation of preservation, because that's also another thing we're seeing locally is equity theft, for lack of better words, due
Yeah.
to fraudulent lending scams, especially targeting homeowners of color, senior homeowners especially, and making sure that people are aware of home repair resources. We have an aging housing stock, and a lot of foreclosures that our counselors are seeing as a result of home repairs that are too exorbitant for that homeowner to afford. So really looking at that preservation key, when to refinance, especially as we're seeing the market start to shift and interest rates starting to ease. A key priority this year for the group is to educate people about what does it mean to have a lower interest rate. There's an estimated 41,000 households who have been on the sidelines in Columbus who are eager to jump in as long as interest rates start to drop the way that they have been. So what does it look like to guide their homeownership journey? And then for our homeowners of color who may not have refinanced in 2019 or 2020, the last time rates were really low, what does it look like to kind of ease their fears and get them to see this as an opportunity to afford for greater affordability of their homes and more sustainability of the equity that they've gained?
We talk about the trust, and one of the reasons why we have so many mortgage-ready Black millennials who are renting today is because they saw what happened in their communities and often to their parents or aunts and uncles. And they're like, yeah, no, I'm not going there. And they could afford to become homeowners, and marketing to them is a real challenge. Are you seeing that in Columbus? And Wendy, how are you seeing that in the rest of the country in terms of how do we reach these folks who are mortgage ready now? Counseling will be useful, but what they really need is hope and trust.
Yeah, so I will say in terms of that trust factor, when we realized or recognized that that was one of the barriers, we did think about exactly what you just said. People who have seen a friend or family member lose a home to foreclosure, and they think, this isn't for me. And I think that goes to the point of how we talk to people about homeownership and finding the messaging about it that really resonates with them. What matters to them? Because if they're in an apartment, they're safe, they're secure, then that might be all that's important to them. But what are their longer term goals and visions? Is it about starting a business? Is it about being able to support an aging family member, having them move in with you and be able to take care of them? So maybe some sort of multi-generational housing situation. So it's understanding that individual consumer. So I guess there is a bit of psychology that goes into it and understanding those fears, but recognizing that home ownership, as wonderful as it is, it's not a one size fits all. People are motivated by it for different reasons. Sometimes it is the being able to get into a neighborhood that has the amenities you're looking for. For someone else, like I said, it's an opportunity to have a family member move in with you later. For someone else, it's about being able to send a child to college or go yourself. So it's about taking the time to get to know people on that level. So helping our practitioners understand how to build relationships with the potential consumer and ensuring that the messaging we have isn't just one note. The idea of, like I said, building generational wealth. For some people, that really resonates. For other people, the idea of wealth, it seems very long term. And it is. We're talking about generations down the road. But to someone else, they hear that and they're like, well, what about me right now? How do I achieve my goals? How do I invest? Those are maybe the buzzwords that are more important to them. So making sure we're calibrating that message to match the person who we're trying to target. And just remember, it's not one size fits all in any demographic.
And as you mentioned, millennials like investments. That's one thing
They
that we're
do.
definitely seeing in Columbus is how can I hack the home ownership thing, which is why accessory dwelling units, ADUs, are the hot topic right now, because I think the same report I mentioned from the Realtor said 37% of homeowners in Columbus are actually millennials, which was surprising to me because when I'm on the ground talking to millennials, they're in their luxury apartments, paying what they would in a mortgage for rent. And it's hard to talk about, but homeownership is safety and it's security and it's assurance. Because you're right, they lived through the foreclosure crisis. But hearing that 37% are homeowners and then seeing the uptick in accessory dwelling units and the interest of building a home in your backyard and using that as rental income or using that to have to live in my parents' home, but still have some sense of independence. I find that that is where the trend is going and where there's a lot of more interest in homeownership, so far as there's this kind of housing diversity or missing middle housing as an opportunity for homeownership.
Millennials get such a bad rap. One of the things, I was at a conference probably 10 years ago, or I guess it wasn't quite that, maybe 6 years ago. It was before the pandemic. And one of the economists who was speaking said that millennials have the highest savings rate of any generation in their age cohort. And I was fascinated by that because that is not the reputation. But the reality is they saw their parents struggle through the Great Recession. And of course, the one thing all people have in common is they believe their parents were wrong until they have kids. You know, those of us who are parents start to get a little smarter slowly. But that's the thing. They were like, yeah, that ain't happening to me. And their savings rate is incredible. My own kids have money in their 401k that they've been able to put away. You know, it's much better than what I had at their age and even older. So we have this population, and, you know, how we reach them is really essential. Do you have any thoughts about what are the most successful ways of reaching millennials who are in those apartments and could be owning?
That is still a code we're trying to crack, if I'm being honest. Bloom 614 has thought of everything. We have done gingerbread house events at these luxury apartments. We've done film screenings. We did this, like I said, this cute, I don't want to say cute in a derogatory sense, but like this series on, hey, home inspections are not that scary. We've tried everything. And I think what I'm understanding about millennials is they are not opposed to taking risk so far as it makes sense for them and their families. So far as it's an opportunity to really try something new, you know, live with a roommate or live with somebody who they've known since college, and the both of them can go in on this risk together. I think that's how I've had to change my conversations as we do this homebuyer outreach is how can you be creative with homeownership? We did an artist journey to homeownership events just in January, and it was a bunch of artists, photographers, multimedia artists with notebooks and notepads in a maker's space, you know, hammers and tools, think of the whole nine. And we were talking about homeownership from an artist perspective. What kind of things would a lender look out for? What would a housing counselor advise you on? And the whole thing is, how can we be more creative with this tried and true equity building tool? How can we do this differently than maybe your parents did, but it's best suited for you and your family?
Although I think that's the right approach. The experience, I think they're looking for an experience. They're looking to be entertained and seen their peers, the storytelling piece of it. How did it work for you? Why did it work for you? And to your point, introducing different models. I think their parents probably thought about homeownership in the sense of I'll buy a house once I get married and I'm ready to have kids. As people are waiting longer to start families, there needs to be this recognition that you can buy a house as a single person, or you can go in with a roommate as a partner and purchase a home together. That homeownership can look different for different people. And I think that's part of how we reach millennials and younger buyers is to realize that you're right. You don't have to do it exactly how your parents do it. It doesn't mean your parents don't know. It doesn't mean they're wrong, but you can certainly do it in a way that's different that fits you.
So, Anna, you mentioned a term earlier I wanted to come back to, ADUs. Tell me, what's an ADU and what does that look like in Columbus?
So as of December of 2025, ADUs were illegal in Columbus. So I'm going to start there. But an accessory dwelling unit can look like a lot of different things. It's also known as carriage houses or mother-in-law suites. It could be a residential abode above a garage, connected to the main home, in the basement of the main home. So it really just depends on what the zoning of that area allows for. And what we saw that in Columbus, ADUs and other kind of missing middle housing like duplexes and triplexes, they've always been a part of the fabric of our city, especially with working families back in the 1800s, new immigrant families in our German village, our Victorian villages. It was a way to keep these newcomer families housed together in a foreign land. However, as policy and zoning became a thing, and then redlining also became the law of the land, you see this missing middle housing disappear. And the laws no longer accommodate for that. And there's a preference for that single family home, that one home, front yard, backyard, that's it. Well, we, as an Affordable Housing Alliance, we did a survey last year to see what kind of housing do people want, actually. And we found that there was an overwhelming support for other types of housing options, like an ADU, like a duplex, like a triplex. And it was because we were seeing there's more need for multi-generational living, more opportunities for homeowners to get rental income, to afford hikes in property taxes. People just do not want to live on that single family lot, and they wanted the opportunity to make that possible. So the city of Columbus decided to, as part of their zoning overhaul, mind you, we've had a 70-year code. Last time our zoning laws changed was 1954. They decided to do this process called Zone In to really look at how to adjust that code to meet the needs of Columbus's current residents. And accessory dwelling units came up as part of that conversation. Convergence in the back end was like, okay, we're not developers, but we care about housing supply. We want to see more affordable homes, especially starter homes, because that no longer exists. How can ADUs be a solution for that? How can ADUs be a preservation tool for our homeowners of color? And we decided to bring 40 stakeholders together, knowing that it was illegal, but we're like, hey, what opportunities can we, with our current variances and processes, what can we do now to make this more accessible? Then the Columbus City Council did their own pilots. So not pilot, they did their own legislative process to try to make ADUs permissible. And they heard about the work that we did. We called it an ADU sprint. They asked us to present it as part of their community engagement process. And then by December of 2025, ADUs are now legal again in the city of Columbus. So that's great news. We're excited that people don't have to go through the whole zoning variance process just to build a home in their backyard. But the conversation that we're having now at Convergence is, how can we make this financially feasible so that all homeowners can take advantage of this? So this year, the group has really focusing on building a suite of affordable financing tools, learning from San Diego, from different cities in California and other places across the nation, what has worked there with an established ADU culture, and how can we build more financing in Columbus that makes sense to our local market?
That's great.
What Anna is saying here about this example out of Columbus with ADUs and the sprint that she mentioned, one of the things that's beautiful about Convergence is the idea has always been that we will take what we have learned and then share it. And so this example has been written up as a case study, and we are building a website. It's a hub for housing practitioners, and we're calling it the Knowledge Community. And it will feature examples just like what Anna said. There'll be, multi-page write-up about this ADU sprint, the workbook or the guide that came out of it with the 9 recommendations and the possible solutions. All of that will be highlighted. And the idea is that we want to share with other practitioners across the country, not just in the Convergence Network. These are the solutions that have come out of this collaborative process of getting 40 people in a room to talk about something so that you can learn from Columbus and you can implement it in your own area. And so the site is being built out right now. It'll launch probably second quarter of this year, and it will have more examples just like what Anna described, as well as tools like templates, photographs from events, agendas, one-pagers on topics. So all the things we've been collecting over the past 6 years from the cities, from our partners, will be housed in a website that real estate professionals, lenders, counselors can go and see, okay, so this is what Convergence is about. These are some of the solutions. How can I try this in my own area? Because we don't want to keep all the good stuff to ourselves. We want to make sure we're sharing these solutions broadly to not only inspire, but to equip others to do the same thing in their communities.
We've talked a lot about Columbus because we have our expert with us. I've been to Memphis with you, and what you're doing there has been so exciting. And you really picked one of the harder communities to start with because they have all of these communities have a unique set of problems and barriers and challenges. Memphis in particular, in terms of housing stock, it was a big deal. Philadelphia is an entirely different market than these other 3. You have nothing but respect for me on you have not been shy about picking these communities. So now you're expanding into Baltimore. I have a soft spot for Baltimore. My first grandchild lives in Baltimore with two of our kids. So I'm spending a lot of time in Baltimore. I'm very familiar with some of the housing challenges there and the opportunities. Our kids are homeowners in Baltimore, first-time home buyers. Tell me about what you're thinking in terms of Baltimore and how the lessons you've learned in Columbus and these other cities have informed how you're going to approach the market in Baltimore.
Baltimore is, as you said, every market is different. One of the things that we're doing right now in Baltimore is having a series of listening sessions with local practitioners. So, session with real estate professionals, one with lenders, one with community nonprofit partners to really understand what's happening. And that's what we do in every city. We do landscape assessments in addition to just research and data, but we really talk to the people who are doing the work. And one of the things that's really coming out in Baltimore is the issue with vacant properties, the row homes. And there's a lot of money, time, and investment from the city as well as from the state going into addressing those challenges. So we want to make sure that with Convergence that we are adding to the work, not duplicating, not getting in the way, but that's come up over and over in the conversation. So I definitely expect to see from a housing supply perspective, how can we be supportive of those efforts to bring these homes back to productive use while ensuring that there's a way to keep them affordable, that there are programs to allow people to take advantage of down payment assistance or other financial tools to ensure that they can remain in the neighborhoods that they've grown up in or return to Baltimore if they had to move away but want to come back. I'll also say that Baltimore has a great network of housing counselors, and we've talked a little bit about that. I don't think there's a need for more education or more resources necessarily in that way of educating consumers, but maybe it is more about promoting counseling in a way that hasn't been done before. So helping to elevate the practitioners that are doing the work, that are getting people ready, that are helping to bridge those information and trust gaps. And so how can we support them? So that is something that's come up in these conversations that we've been having. As far as lessons learned, I would like to think we take something from each city and are able to apply it. One of the things that has really stood out about building these coalitions is we sometimes take for granted that people, just because they know each other, they know what the other is doing. So not only are there silos maybe across industries, but often, and this came up in a couple of the cities, that we see all of these same people at meetings, but we don't talk. We're there for a presentation. We're there for a speaker. But that familiarity doesn't mean that you have an established way of working together. And so that's something that we took with us and coming into Baltimore, and that recognition that these engagement conversations are incredibly important to develop that strong network of people who want to do the work even before the strategy is developed. So those are a couple of the takeaways that we've learned that I think are really going to benefit when we go into Baltimore.
So this is my favorite question. We know that you guys are experts, but I'd like to get to know you a little better. So I want to wrap up by asking first Wendy, which gives Anna a chance to prepare. Tell me the most interesting thing about you that has nothing to do with your work.
Most interesting thing about me? That is a good question. I don't know if it's the most interesting thing, but I have recently become very familiar with K-pop. I have a 17-year-old daughter who is quite the K-pop fan, and there is a girl group called Twice, and they were in concert recently here in D.C., and I took her to that concert, and leading up to that, I got quite the education in K-pop. We listened to the set list, as well as a lot of other K-pop leading up to it. And after the concert, I said, I think I'm good for a while. But I bet you the thing that people would be surprised about, I could probably recognize, and if we played Name That Tune with K-pop, you would be surprised by how many I could respond to.
All right. I know you'd beat me. Anna, how about you?
Same. So not a K-pop star, but I am a singer. My brother is like, how don't people know this about you? But I've been singing my entire life. Apparently, my mom said I could sing before I could talk. I don't know how that works out. But I was a part of my gospel a cappella group at Denison University. I support a Ghanaian ministry here in Columbus called the Ni Ado Ministry. And I've honestly been surrounding my 10-month-old with music. Hopefully that she catches on the music bus as well. But singing is my hidden super talent.
I do love to sing. I love music, but I'm totally intimidated by the prospect of gospel a cappella because there is no room to be anything but spot on in that community. That is the real deal. So that's awesome. That's great. It's been such a pleasure talking to you guys, and I love what you're doing. And it just is such important work. And we make a difference in families, some of whom we'll never really know, and others that, I know you understand, Anna, you get to know so intimately. It's a gift.
Great. Well, I appreciate the opportunity to join you today and to talk about the work we're doing, David.
Thank you for allowing us to talk about Columbus, but we're also excited about Philadelphia and Memphis and Baltimore when they join in.
I'm a native Detroiter and a University of Michigan alumni, and I just want to note for the record, I have been on my best behavior. Take care, everybody. Thank you so much. Thank you for listening to this edition of Beyond Four Walls. You can visit the National Housing Conference at nhc.org. There you can learn more about affordable housing policies, affordability challenges throughout the nation on our Paycheck to Paycheck database, and explore membership in NHC for you or your organization. We appreciate your interest and look forward to working with you in the future. Until next time, I'm David Dworkin, NHC's President and CEO, wishing you a great day.
This podcast was edited by Resonate Recordings.